funds. If I have, let's say, 10 lakhs of savings, would you say put all 10 lakhs in mutual fund in the stock market?
2026 answer is 100% equity. For me, 100% equities is good because markets have consolidated. Markets might go up from here. There are good stocks like, Lemon Tree. One of the top picks, Indraprastha Medical. You have not asked me about stocks, but I'm giving you some names. Last time, our Prime Minister talked about Wed in India. Uske pehle Make in India. So this time it is Street in India. So the medical tourism in India has gone up like anything. My two sister-in-laws stay in US. Even if, coming and going back by business class and, getting the best treatment here cost just 20% of what they would have costed in US.
Firstly, PMSs are not tax efficient. They have much higher commissions. Do you think a PMS can outperform a regular mutual fund?
We believe that mutual fund sahi nahi hai, bahut zyada sahi. Reliance Jio platform will be a 55,000 crore IPO. People really make good money in these IPOs.
Sandeep sir, give me a customized portfolio management service and I give you 1 crore. Which industries would you pick for me to invest?
Okay.
Hey everyone, welcome back to another episode of the 1% Club Show. Most of you guys have only one single question every single time. Sharan, which stock should I buy right now? Which stock is going to become 10x in the next few years? Please tell me that, and that's all I need to know. I've heard you guys, and that is exactly what I'm bringing you on this episode. On today's episode, we are joined by Mr. Sandeep Jain, who is the co-founder of one of the leading brokerage companies based out of Jaipur. Not just that, he has done thousands of ground events over the last few decades. So, Mr. Sandeep, thank you so much for joining us today.
Thank you so much, first of all, for this wonderful and lavish introduction. I never thought, I'll be introduced like this.
No, I think you're very deserving of that introduction, sir.
Thank you.
You've been doing it for so many years. And I am your student today, and I'm here to learn from you.
Oh.
Right? I am merely an educator, but you're the one who teaches people like me. So I will speak on behalf of the audience now. So the audience who are watching us today is somebody who is between 20 to 40. Right? Earning anywhere
I'm quite old for them then.
How old are you?
I'm 50 years now.
So that's what they need. They need to learn from somebody who's experienced.
Oh.
And most of these guys are earning anywhere between 50,000 rupees to 2 to 3 lakhs a month. This is their income.
Okay.
And they're probably are sitting on, 5-10 lakhs of net worth, excluding their home and all of that. Now, for this particular audience, my question to you is, in 2025, as we are talking, and 2026 is just about to come, if I had 100 rupees today, how would you invest today? Let's start with the asset allocation that you would recommend or how you are investing right now.
Yeah, that's a good question. In fact, it's a very important question. So what I suggest is, one should become a very active, passive investor.
Active, passive investor.
investor.
That's the first time I'm hearing.
So I've termed it, I think many I have not, got that R or registered. So patented, I have not got it done. But then active, passive investor is basically, you should do passive investments rather than, investing directly into equities. It's like, you driving a car in the Mumbai traffic from Churchgate to, say, Andheri without a driver.
Okay.
And if you come by a metro to Andheri, I think which one is easier?
Metro will be easier.
Metro will be easier, right?
It's a very good analogy.
So what I feel is, if a person comes by metro, he is actually using a public vehicle. So there are many public vehicles, which is, one of them is mutual fund. And if a person is young, like my son is 24 now. So I made him invest into micro caps. There are very few micro cap funds.
Can you explain what a micro cap is for the audience?
So basically, there is a segregation which is done by MFI. So every 6 months, MFI comes out with a classification of caps. So it is large cap. Top 100 companies of the Indian stock markets listed on NSE are
large cap.
Large caps. Next 150 are mid caps. And the rest are small caps.
Right.
And then micro caps, again, those smaller companies are micro caps, but the universe is basically small cap. There is no category being categorized by them. But NSE has a micro cap 250 index also.
Okay.
So basically, what I feel is, micro caps and mid caps and small caps are the ones where people should invest. If he is young, because your crowd, your audience, those who are watching us, I think they would love to invest in mid caps because mid cap in last 10 years has given 7x returns, 10 to 11 years.
Wow.
Nifty, the large cap, has given 4.5 to 4.6x returns.
Okay.
And small cap even has done 4.75 to 5x.
Okay.
So the best and safest and the hedged, you are Hegde, right?
Yeah.
HEDGE. I love this word.
Right.
Not because it is your surname, because we always talk about hedging, we always talk about hedge positions. So the most hedged cap is mid cap.
Got it.
So all those small caps which become bigger comes to mid cap. And all those large caps, they may not be bad, but because other 100 companies are going ahead of it, that might fall in mid cap. So the mid cap is a very, very sweet spotted
category for investing.
I feel one should certainly invest in a mid cap, a small cap, and a micro cap, and a flexi cap. Flexi cap, multi-asset flexi cap.
Okay.
So basically, it is generally a thumb rule is there that, 100 minus your age is the
equity
investing. And if you have more money, because there may be people who are watching are of my age, right? So then the PMS comes in. That is 50 lakhs. So if a person is say 40 plus and he has an amount which he can risk at, then there is a category called AIF.
Okay.
So I feel that, a person should be invested in all these categories. Because SIP in mutual funds will create a sum which can be invested in PMS or a higher risk, or because now in category 1 you need to be an accredited investor. If you are going to invest in category 1 startups, so you need to be an accredited investor. So that is a tougher thing. But then, category 2, category 3, Cat 3 is basically pure equities. So people, invest in those also. So we generally recommend that, you should divide your things in this. Yesterday only I was meeting a person who has more than 100 crores of portfolio in Jaipur only. So he was investing in mutual fund also. He was invested in AIFs also. He was invested in PMSs also. And he was trading on his own also.
Okay.
Trading on his own is like, you have to actually... that craving of, doing the trading is also there in everyone.
Correct.
So we feel that you should do that also. We will give you research for that. Don't worry. So this is how, so basically metro is the public vehicle, chauffeur-driven car is a PMS, and a hired chauffeur-driven car is an AIF. So, those categories are there. So we feel that active passive investing is the best thing one can do justice to. And he should have a mentor and an advisor every time in every decision. So that's very important. Otherwise, people really lose track and people get demotivated also. At times, people have started investing directly in even mutual funds also.
Right.
I really, actually discourage that, because I feel that, investing through a mutual fund advisor or a financial advisor at times really helps you in getting motivated also, or at least stay invested in bad markets also.
Right.
So it's very important to be, having a mentor or a financial advisor.
Sandeep, you mentioned about these other exotic products like PMS and AIF.
Yeah.
You personally also have a PMS, right?
Right.
When did you launch your PMS?
We launched it last year only. So
Okay.
it's just 14 months now.
And in the last 14 months, I think market has been mostly flat.
Very difficult.
So how has your PMS performed?
Oh, wow. That's a tough question to answer. But then, yes, we are lucky that we performed very well.
Okay.
We outperformed all the indices, fortunately.
Okay.
Yes.
You can't tell the numbers?
Why? Yeah, it was 16.21%.
Okay.
So basically, Budh Purnima was the day in month of May we started our PMS.
Okay.
So since then, the inception returns, like the absolute return is around 28%.
Okay.
And October end, we ended with 16.2% CAGRized. So basically, annualized return is...
Okay, no, before I get into that, a lot of people are not sure about PMS today, right? Because the reason that they say is that firstly, a PMS has very high expense ratio. It's usually 2.5%, right? People are like, Sharan, why should I put in PMS? They're asking 2.5%, whereas a normal mutual fund is asking 0.5%. On top of it, a PMS is not tax efficient because there's a lot of buying and selling. In a mutual fund, even if a mutual fund manager is buying and selling, there is no short-term tax that is applicable, right? But in a PMS, if you're doing that buying and selling, you will have to pay 20% tax, which you'll pass on to your investors. So in that sort of a structure, which we are today, right now, where PMSs are not tax efficient, we have much higher commissions, and in some cases also have performance fees. Do you think a PMS can outperform a regular mutual fund?
Oh, yes, it can. It
Why?
can. Why? I will tell you. See, basically in a mutual fund, there are times, I will not criticize because I sell mutual funds also to our clients.
Sure.
And we believe that mutual fund sahi nahi hai, bahut zyada sahi hai. Right? Like punchline is there.
Right.
So I feel that mutual fund is too good. And there is no good passive investment than mutual fund, as it is tax efficient also. Right?
Sure.
But then, PMS is like, mutual fund is like buying your trousseau from a departmental store.
Trousseau.
Marriage का जो भी कपड़ा पहनते हैं.
Oh, trousseau. Okay.
Yeah, right. And buying a PMS is like going to a boutique store.
Okay.
And AIF is like going to a designer store.
Okay.
So that's the difference. Lots of times when you get very customized, very specified, and we customize also portfolios.
Okay.
So it's very important. Well curated portfolios are there. Lots of times, that the number of scripts in a mutual fund goes too high. But here you get right size of portfolios.
So let me give you an example. So let's say the Nifty 50 has given 15% returns, for example. Now, if you as a PMS also give 15% returns, you are actually going to get probably only 12% to the client because there is tax and there is higher commission.
Right.
Which means you need to generate 18% return
Generally,
to even match up to Nifty 50, right?
Yeah.
So my question is, isn't it difficult to consistently be at an alpha of 3 to 4% over Nifty 50 for a PMS to even break even with the market?
I think I have seen many of the PMSs doing this, and we have been doing it. And I think we will be doing it over the next 5-10 years also. That's what I feel. Because,
getting that alpha of 3-4%.
Yeah, I think I because see, I cannot unnecessarily claim that.
Yeah.
It will sound too boasty, but then somehow I feel that the kind of research we do, the kind of deeper study, I don't say that others are not doing.
Sure.
But we feel that we will certainly outperform all the indices in the longer run also because of the kind of study and the kind of efforts we put in. At times, when you are a departmental store, you have lesser focus on your portfolios.
Right.
And then at times we do curated portfolios also. So which is a very big thing, So I think, it's up to the fund manager also. It's up to the research team also. Lots of other things are also there. Tax certainly is a big factor, but only tax cannot be the deciding factor.
Okay.
Yeah.
So let us go deep dive into this, right?
Yeah.
So let us say I come to you and Sandeep sir, I'll be like, give me a customized portfolio management service. And I give you 1 crore.
Oh, you caught my words.
Right. I give you 1 crore. Now this 1 crore, as of today, which industries would you pick for me to invest?
Okay. So you are putting the same question in a different way, which I was talking about. Yeah. So basically we have capped, that we will not invest more than 4% in a stock. Generally.
Okay.
3 to 4% in a stock. So generally 20 to 25 stocks.
Okay.
So 4 to 5% maximum in a stock.
Sure.
And in a sector, we will go not more than 10%.
So meaning at least 10 sectors will be.
10 to 12 sectors. 8% is basically the average which we have in our portfolios.
Sure.
So what I feel is, rightly diversified sectoral classification and stocks around 20 to 25 is a good hedge. Again, Hegde and hedge. Yeah.
Okay.
So we feel that it is a very safe bet.
Okay.
And this is what we have learned over the period of say 15 to 20 years of our trading experience also. And we have seen lots of our successful clients implementing these because we are brokers. So we have been interacting with all these clients who are very successful.
Right.
And in our office also, out of our 35,000 clients, I feel that there are just 100 to 150 success stories in futures and options.
Okay.
But in cash market and deliveries, yes, there
Any
are immense.
success story?
Yeah.
Oh, wow. Out of 40,000 of your customers, only 100 and 150 people are successful FNO traders.
Yes.
Okay. And
So I feel that, our regulators are doing a great job
right.
of sensitizing them against futures and options. I
So-
must say that.
So let us say if I am a investor who is looking for that passive active investing strategy and I come to you.
Yeah.
So you said you will put it across 7-8 different sectors. Don't you think that some sectors will be better performing than other sectors right now when you invest? Would you
that
give
is
equal
where-
weightage to all sectors?
Yes. It's a great question and it's a well put. Yeah. So basically, the sectoral classic churning is very important.
Okay.
Like now, post budget, there was a different theme. Post GST cut, there is a different theme. So government policies really have a very big impact on the choice of sectors.
Okay.
right? So basically,
So right now, let's speak November, December time.
yeah.
What are the sectors which are?
Yeah. So I'll start with ho ho ho. So what is
Ho-ho-ho.
this ho ho ho?
What is ho?
It sounds different, right?
Huh.
Ho ho is hotels, hospitals, and house improvement
Okay.
and construction. So basically, this is my own, this thing,
Huh.
yet not art and registered, right?
Huh.
So ho ho is first is hotels, very bullish on tourism.
Okay.
The way, the religious tourism, the way wedding tourism, the way tourism is promoted in India it was promoted or it has been promoted since last 5-7 years. It has never been like this.
Okay.
And people believe in domestic tourism also now
Okay.
because the infrastructure is now really good.
Okay.
Then there are good hotel stocks, maybe EIH hotels, because I'm from Jaipur. So I've seen their properties in Jaipur. So famous for,
Can you
wedding.
name some hotels that they have?
So like, Trident and Raj Vilas, Vanya Vilas, and all these properties are excellent.
Okay.
They are world-class properties in India.
Okay.
So EIH is Oberoi Group Hotels, then ITC Hotels, then even Taj GVK is Hyderabad based. So then we have seen how Indian hotels have performed. So Indian hotels is basically Taj Group. So these hotels are doing excellent and they will keep on doing it now, the kind of CAGR they have been giving. So I think hotels will do well. There are many small hotel stocks also which we have been recommending, like, Lemon Tree. Last time I, stayed at Aurika.
Okay.
I went for a seminar in Udaipur. I was staying at Aurika in Udaipur. Then last time I came for a budget show, special budget show on Zee Business, I stayed at Aurika near the airport.
Aurika is the Lemon Tree.
Lemon Tree ka luxury chain hotel.
Okay, okay.
So Aurika has all the, categories.
Okay.
Right from, business hotel to a luxury property.
Huh.
So I think, there are many good hotel stocks which we can, look at. So these are some of them.
So it is one ho.
Huh?
One ho is done.
One ho is gone. Yeah. The second ho now, that is hospitals,
Okay.
Yeah. So hospitals and healthcare and diagnostic chains, I will say that, that healthcare sector is amazing. So in this budget, if you remember, so treat in India. So last time our Prime Minister talked about Wed in India. Uske pehle he was talking about Make in India. So this time it is Treat in India.
For this budget.
Yeah. So the medical tourism in India has gone up like anything. Like my sister-in-law, 2 sister-in-laws stay in US. But when they have to get themselves treated, they come to India.
Okay.
Even if, coming by a business class, coming and going back by business class and, getting the best treatment here cost just 20% of what they would have costed in US.
Wow.
So they have done this twice in last 2 years. So they have double incentive, coming and meeting the relatives also and getting treatment at a cheaper cost also. So if you go to hospitals in Mumbai, Delhi and these metros, you will see many white and, non-white people getting treated in India.
Interesting.
So I feel that, medical tourism is going to be great. And previously in the past years, the medical infrastructure was not all that great. But now, other than Mumbai, all the other cities also have good hospitals. Bombay, Bangalore, Hyderabad, Coimbatore, even Jaipur has got some good hospitals. So medical tourism, hospital infrastructure is amazing. So hospitals are going to give very good returns because the average rental per occupied bed is going up.
Okay.
So that is very important.
Prices are going up.
Prices are RPOBs. It is basically the main
I think
KPI, key performance indicator of hospitals is RPOB.
RPOP.
Yeah.
What is that?
Average revenue per occupied bed.
Average revenue per occupied bed. They track this as a business
We
metric.
track this, yeah.
Okay.
Just say if you track a telecom stock, you'll talk about ARPU. So every sector has their own
Metric.
valuation metrics and the key performance indicators.
So hospitals, you didn't name any hospitals.
So basically there was a Noida based chain, we talked about Yatharth Hospital, yes.
Yatharth Hospital.
Yes. One of the top picks, again a disclaimer, it is there in our PMS also. So Indraprasth Medical, again a fantastic story. One of the promoter is Apollo Hospitals.
Okay.
So Apollo Hospitals again is like, they have a P multiple of say 70, but Indraprasth Hospital was running at say 20-25 P multiple when we started recommending that stock on Zee Business. And now we have it in our PMS also.
Interesting.
Then there are some good hospital stocks again, like, the bigger chains also. Even Apollo Hospital is doing well. Then Yatharth I've talked about. Then Indraprasth is again. Then I'm missing 1-2 names more. Then once it comes to my mind, I'll talk about them. Then the third is Ho. A third Ho is house improvement and home improvement.
What is that? House improvement?
Yeah. So basically, constructing a house, there are many building materials like say plywood or a laminate or say interiors, house interiors,
Marble,
like
tiles.
sanitary, marble, tiles, all this stuff.
Simpolo is one of those.
Simpolo is not listed yet.
Huh.
It is very active in the unlisted space.
Huh.
Many of the big investors are invested in that.
I see a lot of their ads.
Yeah. So in the past, we have recommended Kajaria ceramics at 30 rupees. That was in, say, 2008.
Huh.
There are many stocks, I remember, being recommended very low levels, and then they are like multi-baggers now.
Okay.
So we are very bullish on, say, Stylum Industries. I've recommended that. So Golden Laminates was the old name, now Stylum Industries. It is one of the biggest laminate manufacturing companies in the South Asia.
Okay.
Whole of South Asia.
Okay.
So basically, this is a good company. Then again, Century Plywood is a good company.
Okay.
So then there are good paint stocks also. Now Asian Paints is at a very good level. So I know you can basically, after the news of these big heavyweights coming into paint industry, like say JSW and Birlas. So Asian Paints came down. It cracked heavily.
Yeah.
But again, it has bottomed out and now again it is going up. Because first mover advantage will always lie with the pioneer. Right. And the same thing is happening in this industry. Whenever a new player comes in, he is too aggressive. He will go here and there and, hire and
Try to disrupt the market.
Try to disrupt the market. But after a year or two or maybe 3 years, he realized that, he has lost huge amount of money in disrupting and yet his things are not settled. So till that time, these old players are very matured and they will leave that new player to spend money on that disruption and get tired. And that is what has happened in the industry. So the paints industry, again, Asian Paints is a great stock, great story. So it is a buy on div story from our side.
So whatever you've recommended, right?
Cement stocks again.
Okay.
When you talked about cement is brilliant. That's a brilliant story because despite being a commodity, they have a very good P multiple because there is a brand story also with it. So like Ambuja, ACC, after being taken over by Adani, there's a huge amount of consolidation in the industry. So we are very bullish on these large caps like Ambuja and smaller stories. There are many smaller stories in the cement stocks. So I think, cement is going to do very well. And cement, despite having a very rigorous monsoon this time. So, we had a very good cement sale this time in the last quarter also. And again, coming quarters, I think cement will do really well.
So you mentioned these three sectors, hotels, hospitals, and house improvement.
Or house, yeah.
So you're recommending these sectors for long-term investing or just for this year or next year?
It is there for long term. We are very bullish on these three sectors because...
So I can just invest and forget for 5 years?
Yes, for these. Because after the GST cut, the insurance sector is GST free. So because of this GST cut, these hospitals will have more patients. Maybe, more patients going to a hospital and expecting that is not right. But when it comes to business, yes, they will get more business because now people will buy more insurance. Because health insurance, I'll just give an example of my father and mother, Buying a health insurance for my father and mother, we have to pay a huge amount, right? Because they are aged, right?
Correct.
And even if they charge GST, they should have different categories. For youngster, it can be different. For age-old people, it should be different because old age people really need insurance because they will need some medical help,
For sure.
So finally, our finance minister actually heard to our request. So now it's totally tax-free. So there is no GST on insurance, health insurance. So basically GST, income tax cut. So that tri-cut I will talk about, the income tax cut, 12 lakhs, which is again a huge thing, that will really help banks and NBFCs. Because the eligibility criteria, loan eligibility criteria will go up now.
How?
People will have more money. They will spend lesser. They will have more money. So if 12 lakhs is being shown, because lots of times, people really try to be, more tax efficient. Maybe you may not, connect to it.
Right.
Because there are people, in the third and fourth tier cities.
Okay.
In Bharat, people are not actually aware of, paying taxes. They are not aware of, paying returns, PAN cards. So all these things will happen now,
So you're
There
saying,
will be a great formalization in the economy.
so you're saying a lot of people were not reporting their income because they were not aware of how the
Aware or
taxation
not
system
properly,
works.
yeah. So now, up to 12 lakhs, if people start reporting their income, so they're tax-free. GST is tax-free. Then there were tax rate cuts also by the RBI governor. So the RBI has cut rates twice or thrice. So that is a huge tri-cut. So basically rate cut, income tax cut and GST cut.
Right.
So this is going to bring a big consumption boom in the country.
So consumption is going to increase for sure.
For sure.
But you're
So
saying,
white goods or, the luxury goods, people will start buying them, yeah.
so you're saying that these three sectors will benefit from all of these things
Yeah.
for invest and forget right now.
Yeah.
You don't have to worry about selling them.
Yeah.
So let's talk about Grow. Grow recently went IPO.
Yeah.
And it is listed, I think, almost worth $12 billion at the moment.
Yeah.
Do you think it's fairly valued? And if yes, how more do you think it can grow?
See, when I also do make some videos on IPOs, people on popular demand, I have been doing this. People really love to listen to my IPO commentaries.
Yeah.
So I recommended that, yes, actually the best part about Grow was that they left something on the table for the public. Lots of times, many of these promoters have become very greedy and they are not leaving anything on the table for the investors. But Grow has done reverse and they left something for the investors and it grew heavily.
Right.
So money has grown.
It grew by 70% in the first 1 week.
But yet, looking at Grow, the whole ecosystem actually got repriced. The whole ecosystem means BSE started going up, CDSL started going up, CAM started going up, NSDL started going up. There are many other sectors, like we are very bullish on water, wastewater management and water management.
Okay.
If you see, India has around 17% of the world population, right?
Right.
16-17%.
Correct.
But only 4 to 5% of water resources are there in India.
Okay.
Of the whole globe. So see the mismatch. So the government is very, very cautious and is getting prepared for this problem.
Interesting.
Yeah.
This is an essential commodity. There is a demand-supply mismatch.
Yeah.
And government needs to invest in it for the health of the population.
Yes, right.
So you're saying water restoration companies.
Water management companies, you can say, like Ion Exchange. We have invested in Ion Exchange. That's there in our PMS.
Ion Exchange.
Yeah.
ION Exchange.
ION Exchange, yeah.
Okay. What do they do?
Aapne Zero B dekha? You have seen Zero B?
Zero B.
Yeah. That's basically a filter, basically. And they are also into water filters. And in the industries also, they basically install the water filtration plants. Then they do other water management projects also for the government, infra projects, EPC projects. So it's a beautiful company. It started, and I have started recommending this since long, 7-8 years.
Okay.
So now there is a company called Vatek Wabag also.
Okay.
So there are lots of companies in the sector again. Enviro Infra is there. It's a brilliant company. So there is a wastewater management company, water management company. So these companies are really doing well. So all disclaimers, they might be in our PMS. We might have been recommending to our clients here and there.
So, okay. So this is another sector which I was not really thinking about.
Yeah. That's a surprising sector.
You've not spoken about the popular sectors like banking.
Auto. Yeah, I will come to that. I will come to, okay. I thought I will just wait and, you put me questions. But
no, because I wanted you to tell me in the order of importance and order of priority.
Great.
So you started in
banking and finance. Yes, this will do well. And in that particularly, private sector banks have been doing well. They are the darlings of the FIIs.
Okay.
Yeah. So they are doing very well. And FIIs.
Why are they doing very well? Like people keep talking about banking stocks and
we have seen ICICI Bank and HDFC banks because, these old generation private sector banks and the PSUs had the problem of, services in the past. Now they are very good. They have, realized that problem and now they are getting better and they are giving good competition to the private cousins.
Okay.
But in the past, they have actually taken people for granted. So that's why a space for, these private sector banks was created.
Like ICICI
Bank, HDFC Bank, Axis, Kotak, they are doing phenomenally well. And they have done in the past.
Because they provide better service than the government
Better services, innovative services at the doorstep,
Correct.
So we are also the customers of even SBI also. We are the customers of ICICI Bank also. But now the difference is reducing. Things are getting better.
Right.
PSUs are also doing better. So the whole ecosystem has gone better now. We must say that, we are in a very, very well-regulated country. I travel a lot. I have seen other countries also. We study a lot about other countries' regulations. But Indian regulators, SEBI, RBI and all those regulators are regulating our country very well. And the best part is the retail investors are very, very secured here. Maybe out of, ignorance, many retail investors might lose because they are not actually trying to be aware of things, whatever are there. Yeah.
So you're saying when it comes to the banking sector, private banks are doing
private sector
well.
banks, even PSU banks will do well because now the regulators and the government is now trying to merge all these banks. Lesser number of banks.
Really?
Yes. Just 4 or 5 banks will be there. Then they are very, very well capitalized now. Then the NPA problem.
You're saying the banks, total number of banks in the country will become...
They will try to reduce it to 4 or 5 PSUs. That's it.
Okay. So
no overlapping.
Private will be private only.
Private will be private, but PSU banks like SBI will become a huge player. So the government is really working on that. They want huge banks from the country. Yet, we don't have banks in top 10 in the world. We have top 50, top 100. So HDFC can be one candidate, then SBI will be one candidate. So all these banks are very well capitalized also and the potential is huge. So for a simple, 15 to 20% CAGR, if you ask me, a buy and a forget story can be these stories.
Got it.
Buy and forget stories can be, MCX can be a buy and forget story. I think to my best of my knowledge, it is the only single monopoly business in the country. Every other business has a competition. IRCT is one of them, maybe because ticketing is there. But yet, I feel that MCX is no competition. Other exchanges are trying to come up with commodities, but they are not getting successful.
Right.
NSE is a competitor in the form of BSE. NSDL is a competitor in the form of CDSL. But MCX, there is an agri-commodity exchange, NCDX. We are members of all these exchanges, but MCX is purely into, they are more active in the non-agri segment. So there are these companies. So I feel that, banking and finance and the larger NBFCs will do well.
Okay.
Bank promoted NBFCs and the large corporate backed NBFCs are doing very well. So NBFC is going to grow here like L&T Finance Holding or M&M Finance and all these. But L&T Finance, Cholamandalam Finance, we have seen gold loan bank companies are doing very well. Muthoot Finance, Manappuram Finance, even a company called IIFL Finance, we have been recommending this stock. So I think there are n number of stocks, which are doing well in these respective sectors. And then defense and railways are there. Infra, in the last rally, infra was the big hero. But in this rally, infra is not working at all.
Why?
So, generally, we have seen that, जो last rally का घोड़ा होता है वो इस बार नहीं चलता है.
No, but India still needs a lot of infrastructure, no?
Yeah, so huge spending and they will do well. It's not that they will not do well. But then, in infra, there is a problem of order book. There is a problem of, there are lots of problems, in terms of the competition also. There are some problems relating to, how they get the business. So I feel that, people have become cautious now in terms of infra companies. Investors have become cautious.
What about IT companies in India? Because of the AI boom that's happened, do you think IT companies in India will do well?
See, there is a problem of AI, right? AI boom, yes. So since last few sessions, say 10, 15 days, those big AI heavyweights are going down in US, right? They're coming down.
Right.
So suddenly, Indian companies have started looking better. Infosys, due to buyback, it has bounced back. TCS has actually started, bottoming out. HCL Tech is certainly an outperformer. Out of my channel check when I was in US, I was just talking to people there, what will happen to these Indian companies. So someone told me that HCL Tech is really resilient. They are actually trying to, getting better, with things changing. So they are able to change themselves faster. And so I feel IT companies will do well. Lots of mid-cap IT stocks are also there. Like we recommended Datamatics. Again, it's at a very good level. One can really think of that stock. Then there are some IT hardware companies like you must be using many routers and all. So there are some companies making routers. Then I think IT stocks has a good valuation. And they are getting into data center also. Data center is a big theme. But somehow I feel that the valuations are very high.
So what are the data center companies? Because people say because of AI, we need a lot of data centers.
Data center.
But in India, what is the data center companies coming up?
So like TCS has announced a huge infrastructure, data center infrastructure.
Okay.
There's a company called Anantraj. They have come up with a very huge data center setup. There is a company called Techno Electric, which is again one of our portfolio stocks. They have created a data center company vertical. So data center is going to go up, but then it's a very capital intensive business and the returns may be lesser in the longer run. So that's why I feel that, just because of you having money and just because government is giving huge incentives and tax benefits, people are now coming up with data centers. But in the longer run, I feel that yes, it is an important sector. It's a huge infrastructure business and there's a huge opportunity. But somehow from the investment point of view, I will still wait for the valuations to come down.
And let's talk about automobiles because that is where there's a lot of competition.
This is my favorite sector
Intense competition. Like you never really know who is on top because every other month there is some new car coming out. I'm like, wow, what an innovation.
But Maruti rahega, boss.
But why Maruti? Because there is so much competition, international players coming in, EV transition is also happening. Don't you think it's a very unstable...
GST cut mein biggest beneficiary is Maruti.
Why?
Even Hyundai is also one of the beneficiaries. That's why Hyundai has gone.
Can you explain why?
Because GST on the luxury cars has not been reduced.
Okay.
CC and those criteria are there. So 1000 CC criteria. I don't remember exactly the criteria.
Yeah.
But so Maruti and Hyundai, they are like the biggest beneficiaries.
Okay.
Then
because they make the cars which have the least GST.
Yeah. And then everyone's first car in Bharat, not in Mumbai. Bharat ka matlab, I'm talking about tier 2, tier 3 cities, and that's the real India.
Right.
If you go to those cities, you will see everyone's first aspiration is to buy a Maruti car or a car. So I'm not saying that I'm not here to promote Maruti or, recommend Maruti. But yes, I'm very bullish on this sector.
No, I think living in Mumbai, it's difficult for me to
relate with Maruti.
Relate to Maruti because I see BYD launching, Tesla launching.
I know.
So when you say Maruti, I'm like...
But see, I am born and brought up in Assam from a small town called Nalbari. Went to Guwahati for 12th and then came to Mumbai for my graduation and then back to Jaipur.
Right.
So I've seen, different levels of cities in my life.
Right.
And lots of relatives traveling, stay here and there and we keep traveling. So, Maruti, yes. Then Hyundai is doing well. And then auto ancillary stocks. I always believe in ancillaries. So if we are bullish on power, we'll buy power ancillary stocks.
Can you explain what an ancillary is?
Ancillaries are basically those who are catering to the main sector. Like for automobiles, you need lots of automobile parts and accessories and all. So we will, go to an automobile ancillary company. Like, Ask Auto is one of our top picks.
Basically the B2B companies for the mega B2C companies.
You can say that, yes.
Right, because the risk is...
Intermediate.
The risk is not on me to do the marketing. I will sell it to all of them. It's like they're selling the shovels.
Yes, they have lots of OEMs as their customers. So like, in Jain Saab ke gems also, I remember one of the stocks called Lumax Autotech. So whatever lights you see, there is a, brand called Lumax being written. If you drive a bike also, ride a bike, or you see a car, Lumax is there. So Lumax Autotech, Lumax Industries, Ask Auto, all the brake shoe pads being, around 70 to 75% of the two-wheelers have brake shoe pads from Ask Auto.
So the same company is supplying brake shoe pads to all the companies.
Endurance Technologies, again, related to Bajaj family. So, they supply to Bajaj also, they will supply to Hero MotoCorp also, they will supply to anyone. So basically, auto ancillary companies, yes, Craftsman Automation, again, one of our, good picks. So we have seen lots of these auto ancillary companies doing very well since August 15th. August 15th, GST cut was being announced. And on 18th of August, I have recommended 3 auto ancillary companies on Jain Saab ke gems that day. So Subros, like they are into automobile air conditioning. So Subros is a great stock. So all these companies, yes, good that you have asked me. I was coming up to that. So auto ancillary, auto companies, defense, yes, it will do very well in the long run, but in the shorter run, valuation concerns are there. Railways, government is very, very well focused on that.
Right.
So telecom is again a big industry. I think data is the new oil and we know how we are using, data.
Right.
So everywhere it's only data which we use every day.
You're saying it's a good idea to invest in a Jio right now?
Jio, yes. That's why Reliance is going up. So Jio Platforms is coming up with an IPO, say in the next calendar year. By March, I think they will be coming up with their IPOs. That's what I feel. So Reliance is a telecom company also, and it's a diversified conglomerate, oil and gas. So Reliance Jio Platforms will come up with a huge market cap, and I think it will be a 55,000 crore IPO. So I really, want to suggest to all our viewers that, whenever you are there, even a minor can open a demat account. People don't know about it. Every married person should have a HUF account.
Okay.
So in a family, generally husband, wife, HUF and 2 children, 5 accounts. And if you are in a joint family, you can have number of accounts. So basically in all these, you can invest minimum 15,000. Right. So I feel that, when there are lots of times, there are cult IPOs. Cult IPOs means, who change the perspective. And NSDL was one of them. As I told you that, Maruti was one of them in the past. We saw Coal India. Then there was a negative cult IPO, which was Reliance Power. You don't remember that? That was 2008.
Right.
So it spoiled the whole ecosystem. So people stopped investing in IPOs. So Jio, let's see what is the pricing, because at this point of time, we cannot, recommend. But I feel that people should be ready with all their demat accounts to invest in these kind of IPOs. People really make good money in these IPOs.
Sandeep sir, for somebody like you, how much % of your money is in the stock market?
Yeah, that's a good question again. So generally, I feel that, for me, I did a mistake in 2012-13. First time I made money in my business, I invested in real estate.
Okay.
I didn't make a portfolio.
Okay.
I didn't have confidence on my, conviction or my knowledge.
What did you buy?
Maybe because I was young that time, or,
No, what did you buy? Real estate?
I bought land. Again, in real estate also, it's a very important thing to understand. In Bombay, you can buy a flat. You cannot buy a raw land, It's difficult to buy a raw land.
Amitabh Bachchan has a house here, but we can't buy a house.
Yeah, you cannot buy a house, right? And even a empty land, we generally recommend, you should not buy a flat. If you don't want it, you don't buy that. But it's a depreciating asset. It's not an appreciating asset.
You're saying flat is a
Depreciating asset. Because a flat gets older, right? After 10 months, I come to this office, it will be older by 10 months. If I come after 5 years, it will be an outdated office.
Okay.
Today, it's a beautiful office. What a swanky office. What a stylish office. I came, I entered. Wow. What's it? So, khade ghar purana ho jata hai,
So you're saying because the buildings get old,
yes,
the value will be depreciating after some time.
If it will appreciate, but not
won't
in the speed the way
inflation is going.
Inflation or the other form of property will go up. So there is REIT also. We always recommend, people can invest through REITs. But REITs, there are some issues to it. And but yet we feel that, REIT can be a very safer instrument.
So would you say this only for apartment? But what about commercial building investment?
Yes, you should invest in a commercial property. But again, when coming up to commercial property, there is an alternative called REIT also. You can invest in an REIT. Then, you buy a land. In Jaipur, I invested in a land. I bought land and I invested my money there. Then I realized that, land is appreciating at 6% per annum.
That's it?
Yeah, that's it.
But I thought usually land grows faster because...
Faster than others. There are examples where, you will see that 3 to 4%. Maybe Bombay, see, every city has their own economy. Every city has their own dynamics. So it has to be very, very specific. Because I was in Jaipur, I will talk about my experience in Jaipur. Bombay, yes, I have seen people buying a flat in Kapred at 100 rupees and now it is what price. But again, when you categorize it, it will be not more than 15% or 12%. So the best thing to invest in is stock markets. Believe me this.
Okay.
Simple SIP in mutual funds will make you rich for sure. So I feel that, if a person has to become rich, first a person should buy a term plan.
Okay.
He should do risk management, right? Financial planning ka first part is. Then second, he should buy a good health plan. Third, he should buy a good accidental plan.
Okay.
Then he can buy a home insurance also.
Okay.
Then he should start SIP. Whatever money is saved with, he should start an SIP. And fifth is, he should focus only on his work. Risk management, investments and work. Because if you start trading on your own, you cannot grow by 20% your portfolio. But if you start working well, your salary enhancement can be
definitely more than 20%.
More than that, yeah. So we feel that, there are some amounts, a threshold amount. I don't think that, a person below 25 lakhs of capital should invest directly in stock markets. Because even if you make 20%, that is 5 lakhs.
Right.
So doing a good job and justifying to your job is more important. Mr. Buffett is still trading, still investing. So I suggest that, during the age of 25 to 40, you should start earning only. You are not married yet. Still you are doing so well. I don't know where you will reach when you will be 50 or when you will turn 40. So now you just, make money.
Right.
Then you start trading after the age of 45 or 50. So we feel that, that time you can do trading, but that time you cannot do, maybe, lots of things you cannot do after 50 or 60. So I feel that, at the age of 35, Sunil Gavaskar used to look old,
Okay.
When he was, people started saying that, "Arey, please retire now,
Okay.
Well, that time, so 37, he got retired. So every system has their own retirement ages. Every aspect has their own, dynamics. So I feel that, it's very important to work, focus on your work. And so these 5 things, if a person does, and if he reads 20 pages a day, and if he watches a podcast like yours, sorted for life.
No, but my question is more around the risk management that you mentioned. Insurance to ho gaya. But let's say after taking care of my insurance, if I have, let's say, 10 lakhs of savings, currently, would you say put all 10 lakhs in mutual fund in stock market, or would you give some multi-asset allocation?
Again, see, that's a good question. Again, always I feel that, typically if I have to answer this theoretically, if I have to answer this question theoretically.
Give me theoretical answer and also 2026 answer.
Okay. So 2026 answer is 100% equities.
100%.
For me, 100% equities is good.
Okay. In 2026?
2026, because I feel that, markets have consolidated, markets might go up from here. And if you are invested for long run, it hardly matters.
So what about...
So it is about young age people. For, again, it depends on the risk profile also. But generally what I suggest is 60 to 70% in equities, 10 to 20% in bullion, and 10
bullion
to 20,
means gold.
Gold, silver, yeah. And 10 to 20% in FDs and, interest-bearing instruments. So there are REITs, InvITs, you can invest in them also. So 10 se 12% you get an yield there. Then properties, again, gold again, 10 to 12%. This time, yes, gold is outperformed, silver is outperformed. That's a different issue altogether. But generally, the historical returns are 8% to 9% in gold, 10 to 11% in silver, and equity is 14 to 15%. So basically, equity will always outperform. And that too also, a no-brainer investment is investing in a Nifty ETF. ETFs are no-brainers. ETFs are getting popular now in India. As we have seen in US, people only talk about ETFs. They trade through ETFs. They invest in ETFs. Yeah.
So then when should I buy a house?
Yeah. See, buying a house, when I'll give you my example, I was very sure that I will not buy a house.
Okay.
At the age of 25. I got married. Immediately, there was a need of buying. I was staying in a rented house. Suddenly, the women of the house, they actually aspire to have their own house. They love their house because they have to stay there.
See, I've had 3 guests tell me the same answer.
I know that.
They never wanted to buy a house.
हिंदी में इसको कैसे बोलते हैं? दाम्पत्य सुख चाहिए तो you have to buy your own house.
What does that mean?
दाम्पत्य सुख मतलब family life अगर अच्छा चाहिए, married life अगर अच्छी होनी चाहिए, तो you need to buy a house. It is not for you because your wife, your spouse, if she is not working. So those who stay, men can also stay at house. So those who staying at house, they want a good house. Own house.
But why can't a rented house be nice?
Yeah, it is. It is. I have seen one of my friend, my mentor. He's in US now. What has he done? He rented a house in Lower Parel at 1 lakh rupees a month. And he was saving on 5 lakhs of EMI. And he was investing that 5 lakhs in mutual funds. And after that, he bought a bigger house.
Correct. So right now I'm 30 years old and majority of the audience would be there in their mid-30s. Would you recommend them to buy a house right now?
First, you should be settled. You start making money. And then, if you have a very good salary, so it is always advisable to spend lesser than what you earn.
So give me some numbers. Like today, a
If you have to
30-year-old.
buy a flat in Mumbai,
So let's say I'm a 30-year-old person making 1 lakh a month and I have 10 lakhs of savings. According to you, when should I buy a house? Basically, what should my salary be and what should my net worth be before I even think of getting a home loan for buy a
see,
house?
that depends, what are your aspirations? What kind of flat you want?
I want a 3 BHK house.
Where do you want? See, when I was in Mumbai, I was looking for a flat in Mira Road.
Okay, that's too far.
That's too far.
Yeah.
So if you go to Mira Road, you can buy. But if you want to go to Juhu, you may not.
No, forget Juhu Bandra. That's not the crowd.
If you go to Borivali, still,
So let's assume like Borivali, Andheri, Powai. That
See, I don't know much about Mumbai these days. I
so
don't
that
know
is
about
the
the rates.
affordable areas right now.
Yeah.
So if I take, let's say, a 3 BHK house, it could be anywhere from 2.5 to 3 crore.
Yeah.
Is the price.
So that's a huge money. Right? So you need to earn at least 4 to 5 lakhs a month to buy that kind of house. Because the EMIs for 2 crores will be around, say, 800, 900. So 1 lakh, 60,000 to 2 lakhs of rupees a month. So spending 50% of your salary in EMIs for a home loan
Is not good.
not justified in a way.
Okay.
Not just because, but yet, it depends because it is very important to buy a house. In our setup in India, people love to buy a house. People love to buy jewelries, which you cannot defy. So it depends, But I have seen my friend doing that wise decision and his wife also supported that. So it depends on, what kind of, so it depends, if you want to buy a house, yes, you buy. If you are making 4 to 5 lakhs, yes, you should buy a house. 2 lakhs, 3 lakhs, ho gaya. Theek hai. Then you have to invest also. Then you have to send your children to the good schools also. So that's also, Bombay is very expensive. Mara Jaipur is good that way, but then Bombay is very expensive.
So tell me one.
I'm very confused to answer this question. It's
I get it.
very, very case specific. But somehow I feel that, running a good EMI is better than running a bad EMI. Right? So good EMI is SIP in mutual funds. So always first start doing the good EMI part is running an SIP. Start investing in SIPs. Thoda din keep aside your emotions and start investing first.
So today, like when Kaun Banega Crorepati was launched,
2000, year 2000.
Year 2000, a crore was a lot of money.
Yeah.
People, if you call them a
crore, it's a big money.
So, but today, I don't think so. Because today, if you have 1 crore rupees with you, a lot of people would agree with me that it's not enough to retire. Right? So, according to you, what is big money in India today? When I mean big money, I don't mean Ambani money. I meant like, what is enough money for you to be like comfortable?
See, at least you have to be a dollar millionaire. Rupee millionaire.
That is 10 lakhs.
A dollar millionaire is, say, 8 to 9 to 10 crores.
Correct.
So that is the amount. So, that is the amount where you should start thinking differently. But somehow, it's not easy, it's easily said and done, but it's not like that. But yet I feel that, 4 to 5 crores is one amount people should certainly make in life. Should reach there at least. That will be a money where, he can at least, even if he put that money in FD, he will at least earn 2 to 3 lakhs a month. And 2 to 3 lakhs is good enough for surviving in India in a very, very lavish manner. Very lavish manner.
Perfect, Sandeep. I think that brings us to a very, very grand end to our podcast. So any last piece of advice to the audience here before we end the podcast?
You have to love what you do. So unnecessarily don't go here and there. You have to understand your personality, your character, and work and love it. Love to do work. It shouldn't be, that you're working. Like, I really love, what I'm doing. That does not mean that you have to be very rich. Whatever you do it the best.
Thank you so much, guys, for watching till the end. If you felt like there were any questions that I missed asking out on, please drop them down in the comment section below. And if you have any recommendations for future guests, please drop them down below and we will get them for you. On that note, guys, I'll see you in the next one. Before you go, guys, if this episode gave you even one insight that made you think differently about money, don't just keep it to yourself. Share it with your friend or family member who could use it too. And if it sparked a new thought or even made you disagree with me, drop a comment below and tell me why. Your critique helps me make these conversations sharper and more useful for you. As long as you have me subscribed, I'll make sure that you walk away with at least one new thing every Wednesday.